Hi everyone, I'm Dr. Vishnu Doerga, Chair of Action Invest Caribbean, and today I just wanted to talk to you about investing. I did make a post on Facebook a couple of days ago about the opportunities for investment. As you know, in Guyana, it's likely that every citizen is going to get some income from the government as a one-off payment. And there are different places that could go. You could either save it, and if you do save it, Guyana has an inflation rate of about anywhere between 3 to 5%. And what that basically means that if you receive 100,000 and you keep it in the bank or under your mattress, wherever is more convenient to you, I do recommend the bank, by the way, is every single year you'd be losing 4%. So the 100,000 that you get in 2024, next year it would be valued at 96,000. And then the year after that, it's actually 92,000, because the same amount of money buys less and less goods every single year. So that is what savings does. Yes, people like it, they still have the cash in their hand, but the same money you can buy less and less in the coming years. Savings is one option. Of course, spending is another option. And spending is usually when you give out money and you get something in return that usually has a limited return on investment. It usually depreciates as well. So if you think about it, if you buy a car, we don't have any $100,000 cars as yet, but if you bought a car, or you as soon as you bought that car, the value of the car also starts reducing. Now, this is if you buy a car just for your own use, and maybe if you have a high transportation cost, you might be able to reduce that cost and then use your own car. That could be spending for convenience. But many people also spend it on a party, for example, or going to a show, or buying food. And again, my assumption is that you're already eating right now. So if you do spend it on a show somewhere, that's a one-off benefit. You might enjoy the show, you might actually not even enjoy the show. And your 100,000 might disappear. Maybe it's enough to do 2 shows. I don't know. I don't go to many shows. But those are examples of spending your money where it has very limited benefit and then it's gone forever. The third option, of course, is investing. And when we talk about investing, an investment is really where you take money, you put it into a business activity, for example, like a taxi where you get a return, but it's basically where you plug your money in and you get a return on that over time. And the better the investment is, the higher the return is over time. So my suggestion is always to take a look, first of all, at the types of investments that you can do. And in my post, I may not have said it as clearly as I thought, because I thought people would figure it out. One of the easiest ways to invest is actually investing in shares. The more difficult ways to invest is to invest in a business. Because when you invest in a business, 80% of those businesses actually fail within the first 5 years. And the remaining 20%, half of those fail in the next 5 years. So after 10 years, only 5% of the businesses that started make it to the end. So I'm very cautious. Yes, I'm a business coach, but I'm very cautious in telling people to go invest into a business, especially if they don't have a uniqueness. And a uniqueness would be something like you have a specific technology, you have the rights to distribute a specific product, you're an engineer that has designed some kind of solution, you have a fantastic location that nobody else has, you're planting something that you have a very good skill at actually producing. So unless you have those things, something that really sets you apart, I actually don't recommend business, because what's going to happen if somebody else can easily copy what you do, you're going to end up competing on price. And when you compete on price, it's a race to the bottom. Nobody really wins. The consumer doesn't even win, because for a short time, yes, the consumer is going to get it cheaper, but then you and your competitor will go out of business, and then the consumer is left to, either without the product, or they will then go to a specialist for that product and pay far more than they were paying you. So I would say be very cautious about investing in a business unless you have that uniqueness, or if you really do something that is mass focused, that you know that you can, like taxis, for example, there's such a high demand, but it's not a high paying job. So you will, basically cover your costs. You make some money for the day, maybe more than you would have had as an employee. But when the car is damaged, when the car is worn out and you haven't set aside money because you weren't charging enough as a taxi operator, then now you cannot buy the car. This car goes to junk, and then you're back to square one. Other investments, of course, are real estate. The problem with real estate in Guyana is that the prices keep skyrocketing. What my personal advice to you is to ensure that you've applied for a government house lot, so that over time, as you get more and more money, use all the subsidies that you can get. I know there's a subsidy for steel, there's a subsidy for cement. Utilize those. Get the house built. My encouragement to you is get involved in residential rentals. So when you build your house, build it in such a way that you could rent the bottom floor, or you could rent the top floor, or the back half, or the side half, whichever half of the house you can rent, so that can then come in to start bringing continuous income for you for as long as possible. Houses usually have lifespans of 25 years and over. So for me, that's a way in which Guyanese can really benefit because of the government policies, right? Because there is a policy of giving out, thousands of house lots on a yearly basis. Why haven't you gotten yours as yet? And then the subsidies that are provided. So I think that is definitely one. With 100,000, maybe you'll be able to, buy some more blocks and move it along, do better in your job as well. I think if the biggest investment I've always made is in my education. 10% of my income goes to my education. In the beginning, it was almost 50% of my income that went to my education. And I've always found the more I invest in myself and my mind, the faster I grow. So this is, my own personal preference. I know nothing better than an education to invest in. It doesn't mean that there are not other investment opportunities. And I want you to take a look at yourself to understand, what am I really good at that I still need to develop a high level of skill at? If I'm currently a camera person, do I want to be at the same level for the rest of my life? If I'm the videographer who's behind this camera, or do I need to look at, what course have I not done on Coursera, which is also sponsored by your government, that will allow me to understand how I can make better use of cameras, how I do better equipment selection, how do I get better angles for recording, how do I set up the editing that it goes a lot faster? Because if I were to do that, salary could go up, because now I'm delivering. And if your current employer doesn't appreciate what you bring to the table, guess what? Somebody else is going to observe you and say, hey, Kieran, come across here, man. I see what you're doing. And this is very important, because you need to be able to add value to yourself in order to receive value. Too many people want salaries for which they have not demonstrated that they have the value. So don't be that type of person where, when they pay me more, I will perform. Who knows if you can perform? Demonstrate that you can perform, and either your current employer or another employer will recognize that and reward you for that. To get to the one that is not so common in Guyana, which is investing in shares. There are two ways of doing this. You do have private equity, where you can go to businesses that are not publicly listed, and a publicly listed company in Guyana's definition is one that has 49 or more shareholders. As soon as you cross that 49 mark, you actually do need to get listed on the public stock exchange. So you have many smaller businesses, companies, where maybe they need capital and they're willing to part with some of their shares, where you buy the shares from them. Ideally, the best way to do it is buy it from the company. So for those of you, this probably needs to be a different video. When you set up a company, the company first of all owns the shares, and then the company needs to sell the shares in order to raise capital for the thing the company wants to do. Right? So if myself and Deborah wanted to start a company, and we know that it would take $1 million to get this company going, and we want to be 50-50 partners, Deborah has to have 500,000, I have to have 500,000. We set up the company, and then we take our 500,000 and we buy 50% shares in the company. Now the company owns the money and the company starts using the money to generate more money. So that is if you want to do it on a smaller scale with companies that are not public. My example was about a publicly traded company on the New York Stock Exchange, which is Exxon. The ticker symbol for Exxon is XOM. And coincidentally, at the moment, Exxon's share price is $120 as of the time of this video. So if you do the mathematics, 4 shares of Exxon is 480 US, which is almost exactly to the 100,000 that persons will be receiving. So that's why I picked the number 4. However, on the stock exchange, you have what are called options, and options are buying shares in blocks of 100. So when you do place an option, it will be in blocks of 100. What you can also see with that particular example that I posted is that for the year, Exxon shares have risen almost 20%. So if you had bought a share for, I think it was around $100 at the beginning of the year, you could sell back that share now for $120. So that is benefiting from the increase in value of the share because of the demand. People want more of those shares because they pay dividends. And the second way that you also benefit from buying shares is by the dividends that are being paid. So as of now, Exxon's dividends are about 3%, which means that for every $100 that you have bought in shares, you get about $3 back in dividends. Now, this gives you 2 ways to be able to benefit from investing in the stock market. You benefit from the shares going up in value, and you also benefit from the dividends that you get every year. Some companies pay dividends twice a year, so you can also benefit from that. In Guyana, we have about 15 or 16 companies listed on our stock exchange. We don't have a very active stock exchange at the moment. However, I know that there are plans to really accelerate what we are doing in Guyana with our stock exchange. Some of the companies are companies like the commercial banks, the beverage companies, the tobacco company, some of the insurance companies that are listed on the exchange. And in Guyana's case, we have 4 brokers. So you do need to go to a broker. A broker sets up a stockbroker account, a brokerage account for you. And you tell the broker which shares you want, and then the broker places the order for you, and they inform you if there are shares available for you to purchase at the offer that you're making. I would encourage you, just Google who the 4 stockbrokers are in Guyana. I'm not endorsing any of them. I work with one of them as well. And, someone in my field, I learn a lot about this. So I do have a lot of expectations of where I would like this industry to go in Guyana. But when it comes to investing on the New York Stock Exchange, there are a couple of things that you do need to do. You do need to open an international brokerage account. There are several companies that can help with that. And again, I use a company, and I do want you to do your research. You should never go investing based on a video that you heard somewhere. Please make sure that you actually do courses on investing, that you actually speak to people who are professional investors. And even to that point, they will still tell you this is their opinion. They cannot tell you what to do because nobody wants to be liable for your decisions as well. So you do need to do that education. So step 1 is opening that brokerage account. For the brokerage account, you need a valid ID. You need to demonstrate your proof of address. You need to find a broker that allows Guyanese, that allows international folks to be able to open accounts with them, because some only allow for US citizens, some have a number of citizens, but there are brokerage companies that allow for Guyanese citizens as well. They will need things like your tax identification number as well. The next thing you do is you connect your brokerage account with a bank account, because if you're placing orders, the money has to come from somewhere to buy those stocks that you want to buy. Now, in my case, I'm also, one of our companies is also incorporated in the US, and we also have a US bank account. I also have a personal bank account. So for me, because I already have that in place, it's easy for me to connect my US bank account, because that is the preferred method. There are other ways where you can connect your local bank account, but it takes longer because then you have to do wire transfer. They do charge you for the fees for the wire transfer as well. So talk to any accountant locally or even in the US. If you just type in, US accountants, they can guide you on how to set up an account in the US. If you're thinking about taxation, ask them as well what your taxation requirements will be, because earnings that you create in Guyana, like the reason for our US bank accounts are for the earnings that we create in Guyana, which are then not taxed in the US. You still have to declare them, but you also have to say where they were earned. Earnings on the stock exchange, for example, can be taxed and will be taxed in the US. So we want to make sure that you have that cleared up, and so the best person to talk to is a US tax accountant. Once your account is set up, meaning that they've verified your identity documents, you have connected it to an account so that the orders could be placed, you will then be able to log into their platform, and the platforms have, they're very user friendly, they're very, very intuitive. And then in the same example I used Exxon, so you look for XOM, and you'll be able to see what the market orders, what the market is requesting for those shares right now if you wanted to buy them. And then you can start making a decision of how much you can buy. And that really depends on how much money you have available to put into the shares. After that, you basically just monitor your investment. You have some people who do this daily, and they try to make money on the variations, on the daily variations. So they try to buy low and then they try to sell high. That's one type of investment that does require a lot of time and attention. More and more technology is used as well, where you can actually let this be done by the software automatically. I'm more the type of investor that if I see something that is working well, I'll put my money in there and just leave it to work on its own. The other reason I picked ExxonMobil as well is that a significant part of their operations is happening in Guyana. Most investors around the world don't really get to track the companies as closely as we track Exxon here in Guyana. They buy shares, they hear Coca-Cola is doing well, so they buy Coca-Cola shares. Nobody really goes and pays attention to where Coke gets the water from and how they produce their product and how they distribute it. None of us go to do that. But in Guyana, we hear every single thing that Exxon does. We know when they invest more. We know when another FPSO comes. We know when they're hiring more. We know so much about this company. So why not invest in a company where we know they have such a high opportunity of actually developing themselves, of growing. And we've already seen about 5 years of history of how they've grown in these last 5 years. So that is what I would advise. If you wanted to do Exxon, you can do any other company. When you do have your brokerage account, you will see it will suggest companies that you can also invest in based on your preferences or just based on how they're doing in the market. I would encourage everyone in Guyana to take a look at learning how to invest. For those of you following me from Suriname, you will actually notice that the final investment decision was made by Total Energies. And in Suriname, the state oil company actually has the opportunity to participate in up to 20% of the investment. So we do have that investment being 10.5 billion, which means that Suriname as a country, as a company and as a country has the ability to invest about 2 billion. My suggestion would have been to create a state oil company subdivision on the stock exchange and sell shares to Surinamese citizens, Surinamese companies. You set a limit for how much an individual can buy, how much a company can buy, because then it allows the entire country to be able to participate in the returns that this new operation will have. I think this is also something Guyana could do. If you think about the shares that Hess is selling off to Chevron, because again, Chevron is acquiring Hess. We now know that Exxon is also supposed to have first rights. That is currently in court because those shares of Hess, that company, is so valuable now, and mainly because of the investment in Guyana. My preference would have been that the government of Guyana or the citizens of Guyana should have also been in that race to be able to buy those shares. Again, it's a big investment. I think they're 25 or 30% of the total investment made in Guyana. But I do think that we all need to get very educated on this, because more and more of this is going to happen. In Guyana, we have so many family-owned companies where the founder, the owner, has either died or will retire soon, and the family members are not interested, or they don't have the capacity to actually run a business because their parents made the silly mistake of sending them overseas to become doctors and lawyers, as if we didn't have enough. And what does doctor and lawyer really have to do with running a very successful business where, interestingly, that business paid for every expense, made more money than all the doctors and lawyers put together, but still we send our kids to be doctors and lawyers and not to learn how to run the business. Go figure, right? I've never really understood that. So for those companies, they will have to be sold. And some of them have gotten so big that there's no single individual who could buy them. So there will be an opportunity for companies like even my own company to go into those companies and prep them for the stock market. And when they do get prepped for the stock market, you will have something called the initial public offering, where you can understand what is this company about. If I put this money here, what's the likelihood of me getting my money out back? What will the dividends be like? Be ready for that. Don't be left in the dark where you hear XYZ company in Guyana is going on the stock exchange and you don't know what it means. And you have $100,000 or $10,000 or $1 million sitting, and you don't understand that if you had taken your million and bought shares of this company, you could get a dividend of $100,000, $150,000 every year. And your $1 million would keep growing as well. So don't be left in the dark. I am doing this video as detailed as I can, without naming names and without, other than the Exxon example that I've already named, but without going into absolute detail, because everybody's investment journey is different. I gave you an example that I've used, but also at an overview level, so that if you've never heard about investing before, if this is the first time you're learning about this, that I trust I haven't confused you, that you still understand what investing is all about. And again, our company is heading into the direction, we have invested in multiple companies. Our own company has multiple shareholders who have invested in our own company as well. So we're doing this from experience, but we're also learning very fast on how we can scale this up. So I'd encourage you to do the same. And as usual, if you have more questions, drop them in. If I can answer them in the comments, I'll do so. If not, expect another video on this and other subjects. Take care.